Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, Bu Yuliana, and good morning, everybody. We are talking about target costing and life cycle costing. Let me introduce our group. Me, Andi Priyatama Ramadan, and Kavindra Razik Afif, and Surya Patra Abdillah. Nah, the first one, we are going to talk about the definition of target costing. Based on definition from Harvard, is about the quite long years ago, in 1993. Target costing is a mechanism of a strategic cost management which is capable of linking product, markets, and resource on a strategic basis and transforming this information into quantitative operational measure. So the underline is capable of linking product, market, and resource. This is a target costing. Next one is the more about target costing. It is a methodology based on mechanism of cost planning, management, and control. Nah, the aim of target costing to steer product cost structure since the first phase of R&D of product and production process in order to align it with market and customers' need as well as from strategic long-term objective. So the main point is the aim to steer product cost structure, something like that. Nah, this is the key feature and principle of target costing. The important one is price determine cost. Basically, in previous management accounting, we learn about cost estimates using standard costing, but for target costing, the price will determine cost. After that, we focus on customer drive cost management, and then we focus on R&D of product, services, and process in order to plan and commit an adequate level of cost in the life cycle. And then next, need for a corporate culture and managerial mechanism focus on an interfunctional and intra-organizational perspective. Nah, this is the relationship among price, cost, and profit in target costing. If you want to determine target cost, you must to target price minus target profit. Nah, this is the target costing. But for cost plus methodology, if you want to search the price, cost plus profit. It is a cost plus methodology, cost plus markup. But for target costing, you target price minus target profit. Nah, this is a target costing logic. For traditional R&D and managerial accounting, you design of product characteristic, you learn and you develop the technical R&D, research and development. You have to determine cost estimate, and you determine the profit. You get the price. But for target costing, you reverse the step. The first one, you design a product. After that, defining the relationship among price, profit, and volume. Profit. After that, you get the target cost, and then you technical research and development. It's just a reverse for target cost. Nah, this is the target costing feature. Basically, it is a difference between managerial accounting and traditional management accounting with target costing. For object, for example, in managerial accounting, we have product cost and standard cost, but for target costing, we committed cost in the life cycle. After that, for the product, you got the actual product, but for target costing, you must determine the future product and services. Market issue, they are not considered by cost planning, but for target costing, they drive cost planning. Market issue. For cost price relationship, cost determine price, cost plus price determine cost, and focus on cost control. For managerial accounting, it is inefficiency and waste, but for target costing using R&D. For input to cost control, internal firm efficiency for managerial accounting traditional, and then target costing focus on input from customer. And then the person in charge of cost control is controller. But for target costing is interfunctional teams. And then supplier role, they are involved after R&D. But in the target costing, they are involved since beginning of R&D. Because in target costing, we must to plan what we got the future. Yeah. And then the object to be reduced product price paid by customer. But for target costing, total cost of ownership for customer. And value chain not or little involved. Nah, for target costing involved in the beginning of R&D. Nah, this is the main phase of target costing process. This is the idea, yeah. You must understand the target cost definition. Definition of product feature. You compare target price and target profit. After that, you can get allowable target cost, like the previous slides, yeah. And target cost pursuit. Determination of cost gap. You can compare whether it is with actual cost versus allowable target cost. You can get the cost gap, and the cost design you achievable target cost. Nah, and then for production you got the actual cost, something like that, the steps. Nah, after that the target costing process, yeah, the target costing process. The first one is iterative process. It does not imply a rigid sequence of steps. A series of analysis and evaluation, as well as a trials and error activity are carried out until product, service, system, feature, and related activity are defined, which are consistent with the target cost. This is the iterative process. After that, adaptive process. It starts from customer need and competitors' action in order to implement a R&D process and profitability and cost management driven by the external competitive environment. Adaptive process means that you must adapt with your environment, your competitors, something like that, yeah. And then for inter-organizational and intra-organizational process, it involves all organization function and actor of the supply chains. Means that if you want to implement the target costing, you may involve intra-organizational and intra-organizational process, not just production department, maybe marketing and then financial department, yeah. And then next is highly structured process. It consists of different steps, each of them with the specific aims, involve external managerial tools to be used and deliver output. Nah, this is the output, yeah. Highly structured process. And the next slide, which is life cycle costing, will explain with Kavin, yeah. Please, Kavin.
Okay, this is my part. It is the life cycle costing. So, what is life cycle costing? The definition is it pursues the objective to forecast cost sustained in the whole production surface life cycle, from the product surface R&D until the disposal and recycling. Now it's the four principal lesson from life cycle costing. The first one is all costs should be taken into account when working out the cost of a unit and its profitability. Second is uh, if we have the high attention to all costs, it will help to reduce the cost per unit and it will help the organizations achieve its target cost. And then many costs will be linked to each other. For example, like if we give more attention to the design, it can reduce manufacturing and warranty cost. We give more attention to training, it can reduce the machine maintenance cost. And then more attention to the waste disposal during manufacturing can reduce the end of life cost. And the fourth is costs are committed and incurred at very different times. A committed cost is a cost that will be incurred in the future because of the decisions that we already made. Costs are incurred only when a resource is used. And this sustained versus committed cost. So life cycle costing points out that when dealing with R&D of product and service, uh, sustained cost is not very relevant because they don't give a relevant total cost of the life cycle because it is the first it is it is the first cost that you will have when you are making a decisions for the first time. And then, however, in the R&D of production and service, there is a cost category that has to be put in attention on, and the name of the cost is the committed cost. Committed costs are costs that are committed by decisions on the characteristic of the product service system taken during the R&D. And they also may arise around 80% of the total cost in the life cycle and are very difficult to influence after the launch of product into production. This is the total cost in the life cycle. There's design phase and the market phase. Everything started with the R&D and end with the disposal and recycling. This is the product or service life cycle and sustained cost. So sustained cost represent cost of resources mainly used in the life cycle phase after the launch of product into production, such as manufacturing, marketing, and sales, after sales, disposal, and recycling. Uh, it, is it called as sustained cost? There are also uh, traditionally cost recording method in the income statement by financial and managerial accounting. And now is the life cycle and the difference between sustained and committed cost. The object analyzed by the life cycle, or we can call it LCC, life cycle costing, is represented by the product service system considered during all the time it can perform its functions. And then committed costs refer to cost conditioned by decisions taken on the structure and features of the product, service, and processes during the R&D stages, but that have an impact until the product service disposal. And as we move forward in the life cycle, it becomes harder and harder to modify committed cost. In fact, around 80% of product service costs sustained in the life cycle are committed by the decisions taken during phase before the launch of the product into productions. It is the committed cost from the firm's point of view. First one is the research and development cost. It represented by cost sustained for market research, product service conception and design, document and information handling, and prototype development. For the industrialization's cost is sustained before the launch of product into production or the service delivering, and cost of purchasing production factors such as raw materials, component, labor, industrial equipment, and etc. Then the production cost uh, of different production phase and cost of service delivery process and activity. And then logistic cost is related to distribution, storing, and transportation. And then after sales cost is the spare part, labor, warranty, assistant network, and etc. And the last one is the cost of product disposal and recycling. It is cost for the end.
Okay, okay, here we will continue to the case study. It is the first we talk about target costing. Let me explain about the background of the case. You are an employee in CV Sinar Mandiri Mebel. Your company produces several mebel crafted using woods. Of course, mebel, of course, using woods. Today, your manager order you to prepare a costing calculation using the target costing method. In order to get 30% profit for door cushion or door frame products. Now, there are three types of door cushion which differ by its base material. Here you can see here at the bottom merah wood and cempaka wood and besi wood. From a market research committed by another department, you got the following information regarding door cushion price which already suitable with the current market prices. Here the merah wood price is 375,000 rupiah, and then the cempaka wood have 525,000 rupiah, and the besi wood, the flagship here, have 725,000 rupiah. Okay, we go to the next slide. The cost of product to produce one door cushion consists of the first year. Yeah, I think it's basically like usually we study. The first is the DM or direct materials, and then the direct labor and factory overhead. But we have addition here the shipment. In this case, the direct labor and the shipment cost is cannot be changed. So which changeable is only the direct material and the factory overhead. Okay, we go to the next slide. So here is the calculation for the target costing. The first we have the target cost for product using the merah wood. Here the calculation target cost equal to 375,000 rupiah. Here is the price and minus by it is the targeted profit 30% from the price, and it's equal to the target cost 262 and 500 rupiah. And the target cost for the product using cempaka wood, it's have the same or the similar formula. The target cost here 367 and 500 rupiah, and the target cost for the product using the besi wood 507 and 500,000 and 7 and 500. Yeah, it's quite difficult to spelling. Okay, so this is the price from the first segment, the middle, and the fraction. Okay, we going to the next slide. The table one, or it shows the current total cost for manufacturing one door cushion or one door frame. It's basically the same. Okay. Here the direct material cost. Here we can see for each segment, for each types of products. Merah wood, cempaka wood, besi wood, and the total cost you can see here. 324,000 rupiah for the merah wood, and about 432,000 rupiah for the cempaka wood, and about 632,000 rupiah for the besi wood. If we roll back, the total cost for each product, for current total cost for each product, it's not suitable with the target cost which we already calculate. So uh, as uh, as a good employee, yeah, uh, we will suggest the manager to have a better total cost for each product. So we go into the next slide. Here, value engineering. Because of the difference between targeted cost versus the current actual cost, you may suggest the manager and the operational department supervisor to take some alternatives regarding direct materials and factory overhead. The alternative is as follows. The first is change the size of the wood but still under the same quality. So like if the size before is about 10 to maybe 5. No. What kind of door it? 10 meters. 2 and 1 and out and a half become 1.8 to 1.3, I think. Yeah. But I mean the main idea is to have a smaller size but under the same quality, so we can push down the cost. And then change the size of wood glue, the wood glue, or more efficiently using it. And then change the glazier putty or dempul with another type or brand. Look, and then the last is look for alternatives vendors to get better prices. Okay, I think that's what we can advise, what we can suggest to the manager. Okay, and the next slide is about the next case. The second case study here is about life cycle costing. Suppose that your company before decide to change current bulb like bola lampu because of its maturity. The infrastructure department order you to help them analyzing costs to choose between this is the alternatives. The first is buy 100 watt incandescent bulb with only 10 hours life, and for this incandescent bulb, the price for each is about 35,000 rupiahs. And then the second alternative is to buy 25 watt compact fluorescent bulb with 10 hours 10,000 hours life, but the price is so much higher. If the previous is 35,000, this is 150,000 rupiahs. Now, your task is calculate the life cycle costing between both alternatives and choose the most affordable decision for the company if it need 10 hours life bulb. Here, two main category of cost when we want to decide between the alternatives. The first is initial cost and then the operational and maintenance cost. The initial cost is the cost that we must pay when we acquire a new investment or a new fixed asset. This is the calculation for the first as a life cycle costing for incandescent bulb with only with 100 watt power consumption. Here, initial cost. We will calculate the initial cost for each bulb is about 35,000 rupiahs with lifetime. The lifetime is we got it from the vendors, or I mean from the uh, factory which produce the bulb. It's only 1,000 hours. So if we need 10,000 hours, so the quantity of this in incandescent bulb we need 10 here. So the total initial cost will be 35,000 multiplied with 10. So we get 350,000 rupiahs. And here is the operational and maintenance cost. We can see here hour required to use 1 kilowatt. The base measurement is kilowatt. So we will how to say we will make it in kilowatt. Yeah, it was like that. 1000 divided by 100 here from the power of consumption of the incandescent bulb, and then we got 10 hours, and then kilowatt hours of electricity in 10 hours, 10,000 hours. Here the calculation: 10,000 hours divided by 10 hours from this. The 10,000 hours is what is the lifetime that the company ordered. We have 1000 here. So if 1 kilowatt hours cost is about 50,000 rupiahs, so the total cost of electricity used is 5,000 rupiahs multiplied by 1,000 kilowatt hours, and we get there 50 million rupiahs. Okay, and then we go to the next calculation. It's for compact fluorescent bulb with only 25 watt. Even if initial cost here, we can see the cost for each bulb is 150,000 rupiahs, but its lifetime is about 10,000 hours. It's already suitable with what company needs, and so it's only need one quantity for 10 hours. So the cost is only 150,000 rupiahs, and then the operational and maintenance cost. We see here hours required to use 1 kilowatt, then 1000 divided by 25, we have 40 hours used to reach the 1 kilowatt. It's so long. And then the kilowatt hours of electricity in 10 hours. You can see here 10,000 hours divided by 40, so we get only 250 kilowatt hours. So if 1 kilowatt hours cost is about 50,000 rupiahs, total cost of electricity used is about 50,000 rupiahs multiplied by 250 kilowatt hours. So we got here 12 and 500 12,500,000 rupiahs. Yeah, it's quite beautiful. And yeah, we can compare uh, we can compare both alternative. The first alternative is in scan the bulb with initial cost until 350,000, and then operational and maintenance cost is about 50 millions. So the total or the life cycle cost will be 50 million and 350,000 rupiahs. In other side, compact fluorescent bulb with initial cost only 150,000 and the operational and maintenance cost 12 million and rupiahs. The life cycle costing is only 12 million and 650,000 rupiahs. So from this we can suggest to the department to buy the compact fluorescent bulb because it has lower cost in long term. Yeah, in long term. Okay, I think only that. Thank you for your attention since Andy Gavin until me now. For every question or advice or critics or something, you can put it in the forum discussion.